So we just got breaking news with Trump saying that tariffs are coming.
It's happening.
Now in this video, I'm not going to go ahead and delve into the whole political aspect of what is currently going on, because regardless if you're team blue or team red, what we really want to know is how is this going to impact the market and what are the economic ramifications. Now, I looked over a few videos on YouTube of people talking about this, and I saw that in the comment section in a lot of these videos, a lot of commenters and people watching ask, well, what exactly is a tariff? Now, I want to go ahead and just quickly break that down and then delve into the political ramifications and what are some names in the stock market that you're probably going to want to watch. Now, when the US government places a tariff on imported steel, American companies that buy steel from abroad have to pay extra fees to bring it into the country. These American companies often pass those extra costs onto the customers, which could make products like cars or appliances more expensive and contribute to inflation. Now, before I go ahead and touch on the inflationary aspect of this, I want to make it very clear so that no one is confused, because I know some people may wonder, well, aren't tariffs more damaging for the foreign countries? And the answer is yes. It is American companies that will pay higher fees, but it's more damaging for the foreign countries, right? And I wrote this as well for you guys to, understand very easily. Now, foreign companies suffer because these foreign suppliers might have to lower their prices to stay competitive, hurting their profits, or the American importers will simply cut the trade deal and these foreign exporters will lose in sales. So in essence, these American companies that import these foreign materials, like for example, steel, will be paying more. And so what ends up happening is that these foreign companies that supply it, they're gonna have to either lower, right, the prices to make it actually make sense for these American companies to keep buying, or the American companies are simply just going to say, look, I can't afford these extra prices. I'm going to go ahead and cut you out the deal. And I'm probably going to go ahead and source the materials locally, domestically, which of course will cause a tremendous amount of pain for these foreign, suppliers from these other countries like Canada, Mexico, and China. Now, after the announcement of these tariffs, we saw that S&P 500 pretty much capitulate and have a free fall towards the middle of the day. And one reason, on top of the inflationary aspect, is really just a whole cost restructuring, because these American companies, they're gonna have to look into this and say, well, wait a minute, is it worth it to go ahead and pay extra fees for these imports? Are you guys going to lower the prices down? If not, we're going to have to look somewhere else. And if they end up looking somewhere else, well, it takes time to find new suppliers. And so that bleeds into the profits of these American companies. But we also have to talk about the inflationary aspect of this as well. And that's when the Federal Reserve comes into the picture. See, we know that the Federal Reserve has had a bit of a challenge with bringing inflationary trends downwards, right? Before they used to say inflation was transitory, then they actually realized inflation was actually not transitory and it was pretty sticky. So they went into this crazy rate hike cycle where they were just, raising rates. And then we started going into a rate cutting cycle. Now we're at the rate cutting cycle. However, if we have inflation surge up again due to these tariffs, we may end up seeing the Federal Reserve either prolong with more pauses, meaning less cuts, and that's not really gonna bode well for the stock market. See, the stock market, right, Wall Street wants to see the Federal Reserve cut rates down, because of course that creates a better environment to borrow money. Money is cheaper to borrow at lower rates. And so if you're a company and you're trying to finance and expand a company, you want lower rates. But if the Federal Reserve starts seeing that, hey, look, inflation is actually coming back up and it's actually harder to bring it down. It's already been a problem for them. But if they see it start coming up again, well, they may actually have to pause, or worse, hike rates. And so that's what's kind of causing a panic with Wall Street. But now here's the part where we have to talk about the US dollar. Now the US dollar is starting to rise up again after the announcement of these tariffs. And that's because tariffs reduce the US demand for foreign goods, which in turn reduces the need to convert dollars into foreign currencies. So with fewer dollars flowing out to buy imports, the dollar can become relatively scarcer on global currency markets, which often makes the dollar stronger compared to other currencies. Now, as an American consumer, when you see the dollar going up, you see that as something very positive, because when the dollar goes up relative to other currencies, that's where you want to go ahead and travel. That's when you hop on a plane, you go somewhere else, and you start spending money because your dollars are worth a significant amount more when you start to travel abroad. And so it's, good news for someone who's, going to be traveling out the country. But the problem is when the dollar starts going up, it's actually kind of a pressure for the stock market to continue going up. And the reason behind that is, of course, the exchange rate. See, think of a company like Tesla, right? I talk about Tesla very often on this channel, so I like to use them as an example. But Tesla, they sell cars in multiple markets, right? In China, in Mexico, in Canada, right? In Europe, all these different places Tesla sells their cars. Well, all these different places have different currencies. And so if Tesla sells their cars and they get these other currencies and now they have to convert it back to US dollars, but these currencies are significantly weaker than the US dollar, which has now gotten a lot of strength, well, they kind of lose on profits there as well. And so that bleeds into revenues. And that's why a lot of the larger multinational companies start to have a bit of pain when tariffs come into the picture, right? Remember, everything is connected. And so it's not just one aspect that you have to look at. You have to kind of take this multi-dimensional approach when you're, trying to analyze the market. And you have to understand that, there's ramifications for everything, right? If tariffs take place, well, it impacts this area, it impacts that area, and so you have to take that into consideration. And in this video, I also want to go ahead and highlight what are some things that we want to continue watching going forward. So with that said, I want to go ahead and hop into my laptop to just talk about a couple of names that we may want to continue to keep an eye out. But before we do so, just a friendly reminder that if you found any value in this video, to hit that like button because it really does help out with the channel. And with that said, let's go ahead and hop into my laptop.
Alrighty, so we are officially in my laptop taking a look at ticker symbol SPY, which is the S&P 500 index ETF, and we see that indeed we have this big black candle indicating that there was a lot of selling pressure for today. And the question on everyone's mind is, well, how much selling pressure can the market see? Now, of course, I do not have a crystal ball, so I can't sit here and tell you exactly what is likely to happen or what is exactly going to happen because, of course, I don't know what the future holds. But one thing that we can do from a technical perspective is kind of just look at the market structure. We've been pretty strong for a while. We also see that when we take a look at the S&P 500 equally weighted, which is RSP, there's been some strength. Now, of course, we see weakness today, but overall, we've seen some strength recently with the S&P 500 equally weighted, which simply just means that, all the companies within the S&P 500 have been performing relatively well, right? When you look at RSP, it's equally weighted versus the S&P 500, which has, more of a weighting on the mega cap stocks, like the multinational big mega cap names like Nvidia, Tesla, Apple, Microsoft, etc., right? And so one thing that we see from a technical perspective is that around over here, this area, we see that this was kind of like a resistance in the past. We also see that around this area, there's a lot of volume relative to price, meaning that there's a lot of exchange between the buyers and the sellers. So that could end up being an area of support. So if SPY ends up falling, right, the S&P 500 keeps falling, we'll want to monitor to see if the market holds up here. Now, if it falls below, that could be a problem because, of course, we have this volume pocket, and when there's little volume relative to price, well, there's more of a push up or down in the order book. So something we'll want to keep an eye out for. Now, what is it that I'm looking at in my portfolio? Well, I try to keep my positions within my portfolio exclusive for those within the Push for Profit private group, where I do my daily briefings and I talk about what's currently going on every single day the markets are open. And I publicly shared this idea that I initially privately shared, right? This is him and hers health. I'm not going to go ahead and delve into why this was a trade idea I shared for those within the Push and Profit private group, right? Because, of course, if you want the deeper, juicy breakdowns of my analysis, that's going to be exclusive for those within the private group. But nonetheless, this was a trade idea that I initially shared privately, and then I made a video sharing about it publicly, all right? Because now after the move up, I really don't care sharing it publicly. We already got our nice, juicy gains. But the idea with HIMS, right, which, by the way, this thing did like over 10% today alone, so it's insane. But the idea that I like about Hims, right, and not just Hims, but a lot of companies similar to Hims, is that it's a smaller company. When we look at the market cap, right, the market cap for Hims now it's at 8 billion, right? 8 billion sounds like a lot, but it's really not when you compare it to, let's look at Apple, right, 3.5 trillion, right? So, Hims is relatively small compared to Apple. And so the reason why, again, I'm not going to share a whole reason why I shared Hims privately earlier, a couple weeks ago, but it's a smaller company. And a lot of the smaller companies won't really be impacted, depending on the industry, of course, by these tariffs. And so that's why we may see these smaller cap names or mid cap names kind of be where money is going to be rotating to. I made a video about this yesterday, actually. But on the other hand, we also have gold, which is pushing up. Gold just made new all-time highs, right? This is ticker symbol GLD, the S&P 500, or I'm sorry, the Spider Gold shares ETF, right? So essentially, when you're in a position with GLD, it's kind of hedging with the price of gold. And so why is the price of gold spiking up? Well, gold traditionally spikes up when there's a lot of uncertainty. And so if you're someone who's concerned about, where the market is headed, especially with a lot of the uncertainty with these tariffs, you may want to look into GLD. Again, this is not financial advice. This is not a buy or sell recommendation. You should only trade whatever you see value in. You know what your portfolio looks like. You know how much money you earn, how much money you spend, right? I'm not a financial advisor who's going to go ahead and analyze your situation, right? This isn't personalized advice, right? This is just general advice on YouTube, which is, again, it's completely fine. Just kind of saying that when there's a lot of uncertainty, that's where we see money flow to gold. And so historically, we really don't see gold spike up at the same time when we see the dollar spiking up. But this is a very unique situation where the dollar is spiking up with tariffs, but also tariffs are causing the uncertainty, especially, within this new administration of how high can those tariffs go, right? Because, President Trump has also kind of mentioned that there's still more that may be on the table if, for example, Canada retaliates, which, by the way, they already mentioned that they will likely retaliate, right? Because, of course, they're gonna it's really gonna hurt the Canadian government, right, with these tariffs, and so they're not gonna want to play softball here. They're gonna kind of want to retaliate, and so again, there's a lot of uncertainty, and so you may want to look into gold as just an area of strength for now while everything else is falling down. But again, there's a lot of other plays, like, for example, Hims, which I will share an update of what I'm going to be doing with Hims. I'm likely to be selling pretty soon, and I'll share my next trade idea for those within the Push and Profit private group. By the way, if you're interested in joining the Push and Profit private group, check out the links in the description below, because one of the links is a link to join for just $39 a month. You could cancel at any time, and one of the things I'm known for, really, and this is from one of our members, Johnny with 2 N's here, mentioned that he's been part of multiple groups in the past, but he feels like the briefings I share are far more valuable or reliable since I go way deeper. I think what I try to do is make sense of everything and try to connect everything, rather than someone who's just drawing levels on the chart, right? A lot of these market participants that will have a private group, they just draw levels on the chart. Hey, this is a resistance, this is support. But they won't understand the underlying factors that drive prices up and down. They'll just say, hey, a stock went up and it broke resistance. And you ask them, why did it break resistance? I don't know, right? That's a response they'll have, right? And, coming from my background, I try to lay and synthesize multiple different types of analysis: technical, fundamental, macro, alternative data, etc., right? So if you're interested, again, make sure to check out the links in the description below. You could cancel anytime, but just wanted to share that for those who are interested. Now, again, we'll want to monitor how the S&P 500 holds up, and also keep an eye out for RSP, the S&P 500, equally weighted, right, to see how bad does this end up going down, or do we actually hold up, and do we have strength within the broader sectors of the market, right? Because, of course, if we have tariffs on chips, well, we know that NVIDIA is such a huge, let's look at NVIDIA's market cap, 2.94 trillion. So it's a huge company. So they have a huge weighting on the S&P 500 that's, not equally weighted. And so if Nvidia keeps falling down, well, more pain for the market, right? So again, we'll continue looking for different pockets of the market. There's always opportunities in the market, by the way, right? If you see something falling down somewhere else, well, capital's likely flowing somewhere else, right? Smart money is, rotating their portfolio and they're adjusting, and this happens all the time. And so when something's going down, something else is going up. So just wanted to provide this update on these tariffs. Hopefully this provided a good understanding of what the rudiments of tariffs and the ramifications are in relative to the market. And with that said, again, make sure to hit that like button, subscribe, and I'll see you guys on this next video right over here where I break down line charts. If you're interested in how I look at the charts, check out this video right over here for line charts, and I'll see you guys on that next video. Take care, guys.